country. So that's what I'm going to do. Probably roll down to the price to like 56. So stay between 56 and 62 or 63. I've been doing the iron condors on crude oil, I think since June of last year, and just have kept that strategy because we get these ranges where, even if you pop out of the range for a little bit, you're coming back in pretty quickly. And we're looking at a year where surpluses are expected to build, stocks build, demand kind of easing off a little bit. OPEC is a little bit more optimistic, but the EIA, the IEA, a lot of the big banks forecasting some demand weakness, things like that. It's also notable to say Venezuelan oil, it's very heavy, it's very sour. It's kind of Canadian oil has replaced a lot of that for us. In the 90s, Venezuela banked on, they're so close to the US Gulf Coast, we'll always be a supplier to them. And then kind of the shale revolution happened, things like that. And now we get a lot from Canada. So that's the way I'm playing it. There's also a natural gas play in there. Venezuela did have, an export license or some kind of agreement with Trinidad and Tobago, which is an island that sits right off the coast of Venezuela, for this Dragon project to get Trinidad's LNG exports back up to like 4 billion cubic feet per day or something like that. Right now, Trinidad's at like 2 billion cubic feet per day. So, the project is in, it looks like it could happen now that Maduro's out. Maduro canceled that project because he saw Trinidad being more friendly with the US. But not to get too off topic, there's an impact to the natural gas market as well, which is interesting because a lot of times with the geopolitical events you see in the Middle East, you don't get as much influence on the natural gas markets. But natural gas it's doing terrible. There's really bad weather in the US, no support from it. We've gone down a lot further than I thought we would. 2.8 trading at right now, that's pretty low, especially in January. So yeah, that's the way I'm playing oil. Natural gas, I'm going to try to get long again here. It has to rebound sometime soon is what I'm betting on. But yeah,
Yeah,
that's pretty much it.
that roll market is pretty serious. As you just mentioned, 2.8, 60 cents between the two. I'm still short of put spread in January. Just sitting here on hope and prayer, hoping it bounces back up above 380 as for now. But you're right, it's been getting rocked. And to your point about oil recently, yeah, it showed, right? I mean, it's fascinating how markets just sort of determine these things. I think a lot of people, I know I was wondering, but I really didn't know. I honestly didn't know what to make of this whole Venezuela situation and what was going to happen with markets. But like Mikey said, like I think a lot of people were expecting markets to be down because that's usually what we see in these type of geopolitical strife situations. And in this case, expected oil to be up, and it didn't happen. But I think if you knew, like you said, the amount of production that is not happening like it used to maybe 20 years ago, you would have known that oil is probably not going to fly. And again, it popped a little bit, but not really nearly as much as we've seen, as you showed on some of those other situations. Arab Spring, I definitely remember that was a time to be trading, man. That was wild. So, yeah.
Yeah, I mean, Venezuela, a lot of people are saying, their production could come back really quick. They've really neglected their infrastructure. They have like pipeline leaks almost every day, like major pipeline leaks they're fixing just because they haven't invested in anything. They have a state-run oil agency, the assets are nationalized, kind of how Saudi Arabia is. So there is Chevron, they've been operating there as they have a majority stake. Well, if these companies want to get back in, they're going to have faith in a new government. It's going to have to look like there's political stability before anyone makes an investment. Really, I think you're like at least 5 years, probably more like 10 years out to where if it did happen, and, you saw major US companies move in there, it takes a lot of time to get all these facilities back online, build back up the infrastructure. So it's not a thing where it's going to happen in 1, 2, or even 3 years. This oil it's not going to come back for quite a while, even if it does happen.
Yeah, looking at BP, ExxonMobil, and Chevron, all three of them had a nice little pop yesterday.
They were the winners yesterday for sure.
Yeah, and now Chevron and BP are both down 4% intraday. Exxon is down 2%. which is interesting because oil itself is down 1%. So those products completely reversing, especially Chevron. That's a big candle there. After the pop yesterday, the gap higher, that has completely been erased, and we are now back to the recent highs from January 2nd. So interesting moves for sure, and seeing that oil move permeate more through some of these major products than oil itself, at least right now.
Yeah, I was wondering. I was like, are these moves? Is this going to continue? Is this going to be the new thing for the year? Is this, this is the beginning of it? Still, you can't really tell, but certainly a big reversal from yesterday's move. So I don't know. I guess we'll just have to wait and see.
Yeah. I'm also in crude right now. I've got the long G6 contract, like
Right.
a G6.
Yes, sir.
Long that contract, and I have a ratio spread on top of it. The long 55, 57 call ratio spread, selling 2 of the 57s, long 1 of the 55s with 8 days left. That still has $120 of extrinsic value left. So I'm just going to leave that on. And if we stay above 57, it'll turn my previous losing trade that I rolled from the previous contract into the G to like a $250 winner, something like that.
Well, it was much higher this morning too. Strong fade here over the last couple of hours of trading, few hours.
Yeah, definitely. A couple of big intraday ranges yesterday and today, but yeah, another swift sell-off from yesterday's pop. I'm sure we'll see more realized and implied volatility in there as time goes on. But yeah, other than that, in this portfolio, before we head out, I haven't done anything too crazy in here. We both had that Costco leftover calendar spread. I closed mine into this rally. Costco is having a nice little session over the last couple of days here. But yeah, just wanted to retain that value. It was the long call has 10 days left. It was trading for $400. So just closed that for a loss, but to retain that value. And then ETH into the sell-off this morning, the continuation, I closed that 2027 call calendar spread for $165 winner, which is a nice winner considering it was a $300 debit that I sold out for like $515. So strong return on capital on that one. I'll look to get back in on a little sell-off. And I see, looks like you closed, the Costco position.
Me? Yeah.
Got into corn, silver.
Yeah, I rolled as far as silver, I rolled the strangle that I had. Obviously, silver's continue to move up. So rolled it out, collected just a little bit more and rolled it out a couple of weeks, I think. What did I do? I rolled it out to
End of January, looks
yeah,
like.
yeah, end of January. Yeah. Why is my position not reflecting it? But yeah, in January.
Cool. Yeah, nice adjustment there. And then corn. What are these ags doing? Are you interested in these ags or are you staying away?
I haven't been trading corn too much. Let's see. I got out of my position. I must have got out last week. We do have the WASD coming up next week, but corn, it looks like, we're still, getting a series of like these higher lows, but very, very gently. It's within this range for 435-ish to like 460. Yeah, I mean, I don't know, an iron condor maybe it's got a good IV rank. The other products, wheat, I don't think it's really given us too much in terms of IV. Soybeans, not too much either, 18.9. Soybeans looks like a decent long technically. I mean, it's sitting on like a little trend line. It's bouncing from the lows back in April last year. I don't know. I might get long soybeans if I can, a long call spread or something. But corn, I think, is the most interesting product if you're trying to trade volatility there.
I like it. Well, that's all the time we've got for you today. If you want to shoot us a note on Twitter, you can find us there. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Thomas is at FX Westwater. Stay tuned though. We got more content coming your way on the YouTube channel as well as tastylive.com. But yeah, we'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then. Peace.
hungry, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
Welcome back.
Welcome all of us back. Yeah, welcome back.
Welcome back. Welcome back. Hey.
So this is what vacation feels like? Is that what that
Does it feel
was?
good?
It feels all right. I'm not going to lie. I'm not going to. You millennials might be onto something. This is pretty good. It's pretty good. I liked it. I liked it a lot. How was your, I want to hear all about your trip because I saw videos. I don't know how much
Yes.
you want to talk about this.
I don't know if those videos are primetime worthy.
I did not.
I didn't see any video. I saw like a couple of very artisanal photos of you like looking at the
Yes.
mountains,
Yes.
but I didn't see any video, Nikki.
I had the true like North Shore Chicago experience. All of my friends texted me and were like, wow, it's very bougie.
Very bougie.
I
Yeah.
am so happy for you.
Very nice.
That the
Very
lady
fun.
in your life has got it like that.
Yes. It was a lot of fun. The skiing was very fun.
So where were you in Colorado?
We did Vail and Aspen. Her family lives outside of Vail, so about like 30 minutes outside of Vail.
I love that.
Yeah. Yeah, so
Does she have
Stepping on
a
up.
brother?
I mean,
Does she have a brother?
to a deluxe apartment. And this guy.
her too. Real smart. Works at Microsoft.
Mr. Softy.
How's he feel about a shiksa?
I'm sure he's good with it. I mean, he's an eclectic guy.
No. So you're in Colorado. You're living
Yes.
the fancy life.
Yes.
So what'd you do?
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Nikki, we are back, son. And you know what that means. Time for a little bit more Tasty Live with Confirm and Send on Tuesday, January 6th. But before we do, let's take a look at the market. Our first time doing it together in 2026. Feels just like 2025, not gonna lie.
Yes, it does.
Even the S&P's up nothing, up 25 cents after the big move yesterday in the market. I'll zoom in here yesterday so you can see that. After a big move in the market, here we are, just a skosh off of all-time highs. SPX was kind of funny ending the year around 68.50. It's 69.02 and change. Nasdaq's your mover to the upside still today, a little bit as the market moved higher yesterday. 25,620 and change, up 43. Relatively tight markets last night, about 25 handles on the E-mini S&Ps. Russell and the Dow are both down. Russell down 5. That's your bigger leader to the downside. Dow down 42. Volatility unchanged after being up a skosh tiny yesterday. 1640 is where it sits right now, unchanged. Bonds unchanged, 115.10. Notes are basically unchanged, down 1.5 ticks. Bitcoin, after having a big move yesterday, as you can see here, for over the weekend, going from around 88, 89 to about 94, 95. It's sitting right there at 94.1. I guess a regular expected move, about 1,015 points. Yesterday's move was much higher, around $4,000. Ethereum basically unchanged. Oil up 74 cents. Up 0.74, almost 1%, which is 43 cents on oil. Gold, monster day yesterday. Big move today, $25. Silver with a big move yesterday, big move today, up 2.25. We looked at that pairs trade.
And it just moved like $1 from 78 to almost 79 here. It had a little bit of a pullback.
It was
in the last like 10 minutes, 15 minutes. Silver.
Yeah, it was. Yes. Oh, silver. Yeah, silver went
Gone.
to.
The spread has widened out, is what I'm saying.
The spread has widened out. Yes, you are correct. It was trading around 57 and change just a moment ago. Last time I looked at 57.20. It looks like I can do it right now for you. 44.77 divided by 78.
56.50. Got all sorts of things on.
56.70.
There's this thing called the internet. You can get all these things. You don't have to.
I know, but I'm old school. I like doing it myself. I
know,
don't
it's okay.
trust anybody. But you're right. 56.70 is where it sits right now. This is about as low
As it's been.
as it's been.
You want to do it?
I do.
You want to do it? Okay.
I do. I actually wanted to do it $500 ago, so I guess it's
Yeah,
better,
so this is even better.
better now, right? So we'll be looking to buy 2 gold futures, sell 1
Yeah.
silver future. You sold your silver future. That was real easy. Actually sold at mid-price, which is pretty decent. Now it's the offer. You sold the offer. Now you got to look to buy 2 gold futures.
There we go.
There you go.
I only got 1.
Yeah, you got. There's your other one. Beautiful. All right, well push that.
Scared of me. They were scared of me. They're like, "Oh my God, the bats are back." You got to squeeze them for a little bit. Can't just give them.
Got to try to do something. As you put it on the bid, it was good.
Yeah.
All right, bought 2
gold versus
Gold.
1 silver.
Very
It's
good.
vol adjusted pairs trade. So you know, and
Correct.
we've seen that get wider and wider.
We've seen it
It
get
is a big position. Just keep the whole thing.
even
on.
with the micros. It's a big position.
with
You're
the
right.
micros.
That's moved $500 today.
Yes. And they can both go against you too. So that's the other thing that you have to keep in
Sure.
mind. It's like
And have.
yes.
And you've gotten in a little bit of trouble when you trade futures. You
Yeah.
start getting real cute and creative.
Yeah.
You take one off. You start
do
selling
this.
another one. You start doing it on the weekends, in between football games.
Yeah. But you scalp a couple $100 here and there, you know, lunch money.
Makes you feel good.
Yeah.
Makes you feel
You
good.
gotta
All
feel
right, beautiful.
something nowadays. Come on.
Yeah. Beautiful. All right.
Let's do it. Confirm and send.
Confirm and send Tuesday,
January
January
6th.
6th.
Wow. Time flies.
Flies when you're having fun. Why do you roll? Not why. Would you roll the untested side of a $10 wide iron condor to defend it, or do you just leave it?
I usually just leave it. I like to leg out of the side that has lost most of its value. So if you start with the delta neutral iron condor, stock goes down. I leg out of the call spread. It synthetically gets you more long into lower prices because you're taking off this call spread. It's marginal. It's a very small amount of delta adjustment. But I tend to, with defined risk trades, especially with a relatively small amount of risk, I want to lean a little directional into these moves. And that's how I trade it. You know, your stop is built into the trade on entry. It's a defined risk trade, so you can only lose so much. There's just not, that is your management, in my opinion. It's like what we have in MicroStrategy or MSTR. We have that at the money put spread where the call spread that you sold at $1.50 goes to, 30 cents. I think I closed it at or something like that. I can't.
Yep. That's exactly what you said.
Yeah.
Yep.
I closed it at 7 cents. I'm sorry, 7 cents. So you take that spread off, and now you're leaning long at lower prices. That's, what you kind of dynamically want to do.
I agree with you. You can roll the untested side. If I roll the untested side, I use more buying power and roll just the naked option. So if the stock was going higher, since we're at or near all-time highs, I'd be taking just the short put, not the long put, just the short put, and rolling it up $5 or $10, trying to collect another buck and a half. If you did $3 when you originally did the iron condor, which is 1/3 the width of the strikes, and you got another buck and a half on your roll up, you're right there around $4.50 or $5 on a $10 wide iron condor, which gives you a 50-50 shot. More risk to the downside. You are using more buying power, but that's it. I roll it the one time and I'm done.
We did. Did you notice what we did on that one?
Oh, you did the big one. You did the big one. You did the big one.
It worked out. We took like 3 or 4 points out of that.
You did, but you
I was wondering. I was like, why?
you just did it. You just did.
No, I got it back. So we did 2 of the GC contracts.
Ah, got you.
2
Got you.
GCs,
You
which
did 2 big gold futures.
Big gold ones. Big gold ones.
that you bought. So
we
you
just took a couple bucks out of that because I was like, why is this moving so much? I was like, this is a huge one.
so
Like, but it's only up a couple dollars here. So
you sold out your big GC future
Yes,
for $2, almost $2
yeah,
profit on it, and you bought
which
back.
is 200 each.
Yes. Yeah.
Yeah.
Better to be lucky than good.
Yes.
And
yes.
if you're lucky and mentally not as high as everyone else, it's even better. So you did really good in this.
I'm back in the chair. It's I gotta get my hands
It is the
back.
chair. I'm going to sell that chair someday.
I gotta get my hands back. So now we're in the silver gold with the micros. Properly. Long 2 of the MGCs, which is the micro gold. Short 1 of the SIL, which is the.
I just want to know: did somebody send you an email to alert
No,
you?
I was.
You
were
looking at the
looking at it. I was like, why is this moving $400 or $500? And
It should be $40-$50.
Yeah, it should be
and you're
nothing.
looking
And
at
I'm like, what is going on here? And then I'm like, oh, that's a big boy. So.
See, I must be too bright because that never happens to me. Like I would do it. It would be just the opposite.
No. I don't know if that has anything to do about that. I think it's just good versus bad. Like, but I've had the one, we've done a couple of like the NASDAQ, the big NASDAQs that have gone against us, but
Good.
it's probably a wash.
It's probably a wash. No, you did good.
No, it's in the grand scale.
Next
that one worked. So.
Next question, please.
How is it that IVR can go over 100 or under 0?
That's a good question. If you've been watching Tasty Live for a long period of time, you know that IVR, that's the number on the top. Like if we were looking at silver, because we were just looking at silver and gold pairs, you'd see that IV rank of 83. That number can go intraday over 100 and under 0 to a negative number. There's no rails, there's no fences on those numbers intraday.
Yeah.
Why, you ask? Well, that's to show you that if we had fences on them, it would get to 100, and let's say implied volatility was 68. If it went to 69, it would still say 100. If it went to 70, it would still say 100 intraday if there was a fence on it, which wouldn't be accurate. So if it gets to 68, and that is the highest it's ever been over the year, and then it gets to 69, it would be 101 or 102 or 105 or 110. And conversely, to the downside, it would be the opposite. It would be a negative number. To let you know that intraday, the IV rank is as high as it's ever been, and it's an absolute number, or as low as it's ever been, and it's an absolute number. Then tomorrow, if the new high and the IV rank was 110, let's say, and it was 69, and volatility opens at 69 again, it would show you 100 because that is the true highest that IVR has been in that year. And if it went a little bit lower, it would continue to go lower. If it went higher, it would continue to go lower. Not too much to add to that. I know I did a great job on it.
Amazing job.
Awesome. So there's no fences intraday is the short answer.
Yes.
Beautiful. Next one, please. When IVR is low, we got a lot of low IVR right now. Like it is in most underlines at the moment. What strategies make the most sense to use?
I mean, you could go into the futures like we've been trading, just static delta in general, whether that be shares or futures if you want to add a little leverage. But, start looking at like poor man's covered calls or diagonal spreads. You can even do like calendar spreads or butterflies, broken wing butterflies, those sort of things. When volatility is low, it's relatively cheap to buy premium in whatever capacity you're looking. And so